Hi there, welcome to Kneppy Invest. It is that time of year, confession season, when the management of companies that they are running come to the realization that the company they are running is either doing better than they expected or worse than they expected. So this time of year, we do see a lot of trading updates almost on a daily basis. And these trading updates can be downgrades or upgrades compared to previous expectations. And these downgrades and upgrades can have significant effects on the share price of those companies. We also see quite a few half-yearly and yearly reports released in May, and we did get a pretty stellar release by one of the biggest companies on the ASX. So I'll touch upon that half-yearly by that company as well. So in this video today, we'll be looking at half-yearly, also focusing on 2 downgrades and 1 upgrade. And the funny thing is, a lot of these downgrades and upgrades, the managements will have excuses, and a lot of these excuses are fairly common when we look at all these downgrades and upgrades. So let's get stuck into it. But before we look at the first company, what are these 4 companies I'll be focusing on in today's video? The 4 companies that I'll be looking at in today's video are Boral, Aristocrat, Bluescope, and Eagers Automotive. The 2 companies that did do or release downgrades are Boral and Eagers Automotive. Bluescope Steel released an upgrade, while that stellar half-year report was released by Aristocrat, which I do think is a high-quality company on the ASX, but definitely not the company for everyone, just simply because of what they do. They're into gambling and gaming, that sort of thing. So there is that sort of ethical, moral question you have to ask yourself as an investor. For me personally, I have no problem investing in those sort of companies. I don't believe in the nanny state. I don't believe governments should be dictating what we should do. In fact, I'm the person who believes all drugs, including those real hard drugs, should be absolutely legal, because the war on drugs will never be won. And if it is legal, it makes it much more safer. And you'll also see a significant decrease in crime. Just think what happened in Prohibition in the United States back in the 1930s, a massive increase in crime. So that's just my opinion. I believe the government should be less about nannying us and more about leading the country in the future or for the future. The first downgrade I want to look at in today's video is Boral. Now, we go back, this story really starts the 22nd of March, because they did release a trading update and financial year 22 guidance on that date. And this was lowering their expectations. And the reason why they had to lower their expectations were because of 2 things. First, exceptional rainfall in New South Wales and Queensland, and sharp increases in fuel and coal prices. Because of those 2 factors, their expected EBIT for financial year 22 was now between 145 and 155 million, assuming no further extraordinary rain events. Not sure I like it when, well, I shouldn't say that. I don't like it when companies make assumptions about the future, because a lot of times when they make assumption, it comes to bite them on the butt. And that is exactly what's happened to Boral. They've released another downgrade on the 18th of May 2022, and this is a $45 million impact to EBIT. So they were expecting EBIT to be between 145 and 155 million. So that's going to be more closer to $100 million now. And they've actually broken it down to the effects those 2 factors had. Remember, there was extraordinary rainfall and those high energy costs. So the extraordinary rainfall, exceptional rainfall, has a $30 million adverse effect on their EBIT. And that rainfall just keeps on coming. And they've actually mentioned here that $30 million adverse effect assumes additional rain days through the balance of May and June. So they're no longer making assumptions. In fact, they're being conservative now and just assuming there is going to be further rain problems in the future. So the reason I like that, this sort of assumption, is they're being conservative. And if it suddenly dries up in New South Wales and Queensland, there might be a surprise to their EBIT numbers on the upside when the half or the full year results actually come in. So I do like this more conservative approach from management in this particular downgrade. And the other 15 million impact is from inflationary impacts, primarily higher energy costs, which are assumed to continue to be elevated to 30th of June. So again, they're making these assumptions, conservative assumptions. So there is a chance they're actually going to beat these new expectations if these assumptions actually don't come to fruition. If we take a look at Boral's 1-year chart, and to be fair with you, I don't really follow Boral all that closely unless I see some interesting trends in the share price. And really, over the past year, there has been a couple of interesting things that happened with this company. The first really interesting thing happened in June, July last year. There was a takeover bid by Seven West Group. That's why you see the share price just go sideways without much volatility. That's because during that period, there was that possible takeover bid. Sometimes takeover bids fall through. So it looks like that's exactly what happened with Boral, because then we saw the share price drop towards the end of July. So what I tend to do when there is a takeover bid for a company I do own, I sell very soon after that takeover bid. The only reason I might not sell out is if I think there might be a bidding war, but bidding wars are fairly rare. So then the share price drifted down, and then the company announced they were going to do a significant capital return to shareholders. This was like a $2 to $3 billion capital return per share. It was $2.72. That was done at the start of, or the beginning of February. You'll notice just before the share price made a massive drop, which was that capital return date, the share price went on a little bit of a run. In fact, the share price increased from $5.60 to $6.60 in about 4 or 5 trading days. That's just those income investors who saw the opportunity to get $2.72 capital return. Now, they would have had a more than $2.72 capital loss. So just don't think this is free money. So when you get a capital return or dividend, that same amount is taken away from your capital. So dividends aren't free money. That's something a lot of investors don't understand, because you will get a significant capital loss when you do take that capital return. That's exactly what happened with Boral here. In fact, the share price fell from $6.60 to $3.80. So if you add back the capital return of $2.72, that's $6.52. So the share price fell by that capital return. So again, a capital return or dividends is not free money. You do have to pay a price to get that dividend or that capital return. And ever since that capital return, the share price of Boral has been drifting lower. More than likely, the market is aware of these adverse effects upon the performance of Boral. And we didn't really see significant drops in the share price of Boral when they did do these 2 profit downgrades. But the share price has been falling. So again, I think the market is aware of these issues with this company. Second downgrade I want to look at is Eagers Automotive, and this is a little bit more bullish sort of announcement, and it's not surprising the share price didn't really suffer all that much. So this is a company that owns car dealerships, that sort of thing, and they did talk about how there is a bit of strength in the underlying performance. However, there will be an impact to the half-yearly performance because of pressures in supply of new vehicles, because of semiconductor shortages, and because of the Ukraine conflict and China COVID-19 lockdowns. And that means when you look at the underlying profit before tax this year, or this half year, is expected to be between 183 and 189 million. And that's down quite a bit from last year, where their underlying profit before tax was 215 million. So even though it looks like the performance of this company this year does not compare favorably to last year, a little bit more bullish in the overall commentary for Eagers Automotive Fleet. And that's probably one of the reasons why the share price of this company didn't fall as much as I expected it to. However, in saying that, the share price of Eagers Automotive Fleet is in a downtrend right now. And usually when you do see a profit downgrade in a downtrend of a share price of a company, you will see the share price suffer a fair bit more than we saw with Eagers Automotive Fleet. Share price was only down about 2 or 3% on the particular day they released this profit downgrade. So at this point in time, no interest in this company right now, just because the share price is in a downtrend and at least a 1-year low in the share price right now. Now onto the one upgrade that was released by Bluescope Steel. Not surprising, because this company has released a plethora of upgrades over the past 21 months. In fact, I took a position in Bluescope Steel August 2020 when the share price moved into an uptrend, and that was the start of the upgrade cycle. It hasn't come to a completion just yet. The uptrend in the share price definitely has. We'll have a look at that in the chart in the next slide. However, I did take profits at that point in time. However, the upgrades keep on happening. But it's not all blue sky for Bluescope Steel. When you look at the commentary in regards to this particular upgrade, and the upgrade was in respect to earnings before interest and tax, EBIT, they've increased expectations from a range between 1.2 1.35 billion up to a range between 1.38 and 1.48 billion. And the whole reason they've increased their expectations is because of the North Star in North America coated business, improved or better than expected steel prices and spreads in North America or the United States. However, in saying all that, there is a bit of weakness or softer than expected domestic dispatch levels in Australian steel products due to a range of supply chain disruptions, flood events, rail outages, and COVID-19. So not all blue sky for Bluescope Steel. Their domestic market or domestic division is facing some pressures, and they are doing really well in the United States and North America. As we take a look at Bluescope Steel's daily chart over the past year, there's one reason I wouldn't take a position in a company that does release a profit upgrade, and that one reason is if the share price is in a downtrend, and Bluescope Steel could be argued that their share price is or has been a downtrend over the past 6 to 9 months. The share price did reach a low of about 17, we'll say at least a 1 year low of $17.50 just previous to the release of this profit upgrade. And the reason I'm way more hesitant to take a position in a company when it does release a profit upgrade, when the share price is in a downtrend, is simply because of the resistance of all those shareholders who have bought into Bluescope Steel over the past 6 to 9 months at higher prices. They're more willing to sell out. If the share price is at an all-time high or at least a 6 month to 1 year high, when they do release a profit upgrade, there's much less resistance moving forward. And all those shareholders who bought in the previous 6 to 9 months are less willing to sell. So I have seen this over and over again. When a company does release a profit upgrade, when the share price is in a downtrend, you won't see the share price or the market react quite as favorably if the share price has been in an uptrend before the release of the profit upgrade. Now onto the daily chart for Bluescope Steel over the past year. And even though the share price was initially in an uptrend up to about August of last year, share price reached a high of about $26. Didn't realize I got that up high. So I actually did sell out a little bit lower than the all-time high, maybe not the all-time high, but at least a multi-year high at $26. But ever since that high in August or July last year, share price has been drifting lower. You probably could argue the share price right now is in a downtrend. Whenever I see a profit upgrade from a company, the first thing I look at is whether share price is in an uptrend or downtrend, or even in a neutral state, share price consolidating. And I want to see where the share price is now when the company releases the upgrade compared to the previous 6 to 9 months. If I see the share price is at a 6 to 9 month high when the company releases the profit upgrade, that is a buying opportunity, in my opinion. But for Bluescope Steel, when they released this profit upgrade, that was only about a 2-week high. We have seen a share price at significantly higher prices in the previous 6 to 9 months. The reason that is important, and you have to take that into account, is because there are a lot of shareholders right now in Bluescope Steel who bought into higher prices in the last 6 to 9 months and are much more willing to sell. In fact, they want to sell because right now they think Bluescope Steel is a dog stock because the share price has fallen from when they bought. That's the mentality of a lot of investors out there. So the reason why I want to see at least a 6 to 9 month high, even more than that, is because shareholders who bought into this company or that company in the last 6 to 9 months are in the green, and they're much less willing to sell out if the share price is moving higher. Now onto the one awesome half-yearly report, and this was released by Aristocrat Leisure. This is a company that owns or makes a lot of poker machines, that sort of thing. They also have a social gaming division that is gaining traction. So what we're doing now, or what I'm showing you in this slide, is just their financial summary comparing to last year, and everything's up quite a bit, and the market has reacted really positively to this financial results from the company. So usually you have to compare the results of the company to expectations. I have no idea what the expectations were, but just based off the reaction from the market, these results beat expectations. Operating revenue up 23%, EBITDA up 30%, EBITDA margin up 1.9 points or percentage, EBITDA up 38%, profit after tax up 47%, earnings per share up 41%, interim dividend per share up 73%. And then they also provided operating cash flow, which I love here. That's up 42%. So everything up from last year. So that's the reason why, or one of the reasons why the market has reacted really positively. Share price was up 6% on the back of these results when the overall market was down 1.6%. Now let's have a look at the chart to see whether this is a buying opportunity in regards to this company. Now let's have a look at Aristocrat's daily 1-year chart. And probably the only negative thing I could think about this company, apart from any moral, ethical questions you have about Aristocrat, is just their technicals. So the chart for Aristocrat was pretty bullish up until about October last year. Share price was in an uptrend. That uptrend and the sentiment in this company actually turned around towards the end of 2021 into the start of this year, and the share price of Aristocrat actually moved into a downtrend in January of this year, and the share price has been falling ever since then. So that move into a downtrend occurred around about $45, and just before the release of these half-year results, share price had fallen all the way to about $30.50. So almost a 50%, not a 50%, a 33% drop in share price in a fairly short period of time. However, on the release of these half-year results, share price did increase 6%, or 6%, not 60%, but 6%. So the market did react quite well to these results. We also saw pretty good volume as well, and quite stellar results if you take it in isolation. So the only negative thing about Aristocrat right now is that the share price has been significantly higher over the past 6 to 9 months. And just like Bluescope Steel, there will be a lot of investors in this company who will see the opportunity to sell out because the share price has risen on the back of these half-year results again, because the share price has fallen from when they bought in. They actually think Aristocrat Leisure is a dog stock, even though they did release really good financial numbers. So the only way that the share price and this company can get past that resistance from all those shareholders who want to sell out is if we do see increased volume. And that increased volume would be those fund managers who are excited about these half-year results. So that is the one reason I think the share price can rally from here on in, is if we see increased interest from those fund managers in this company. So I will be following this company quite closely over the next few weeks just to see where the share price goes. If we see the share price fall from here, actually move towards $30, that will be a bearish move. But if we see the share price move back towards $40, that will be a bullish move. And I think Aristocrat actually could do that. And I do think this is a high quality company with significant growth in the future, and even around about $34 to $35. This company does look like good value. That's all I have for this video on 2 downgrades, 1 upgrade, and 1 awesome half-yearly report released by Aristocrat. Those 2 downgrades, Boral and Eagers Automotive. I really have no interest in either of those companies right now. Neither the 1 upgrade, Bluescope Steel, share price has been struggling for the last 6 to 9 months. So no interest in that company. The 1 company I am interested in is Aristocrat. And even though share price has been in a downtrend, and I would prefer these half-year results to have been released when the share price had been consolidating or was in an uptrend, I'm going to keep a close eye. And if I do see some strength in the share price moving forward from here, that might be the time to take a position in this high-quality ASX company. If you do have any questions about any companies I have featured in this video, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.